Welcome back to Trading with CJ and welcome back to my monthly X Dividend series. You may already notice that we have separated the UK and the US into two separate videos. So hopefully this is more beneficial to you if you only invest into one or the other. But nevertheless, the US one is out as well. It's on my channel right now. I'll also leave it in the link in the description. So after this, feel free to head over and check that out as well. But in this one today, we are covering 5 different stocks from the Ftse 100 in the UK that are going ex-dividend very soon in the month of December. As usual, please remember that I'm not a financial advisor, so if you are planning on investing into the stock market, you should always do your own research first. And if you could smash the like and subscribe to my channel if you haven't done so already, that is greatly appreciated. So, let's get into it. So the first company up here is in the Ftse 100, and that's Epic code SVT Severn Trent. Now Severn Trent is a utility company, and it's basically a water and sewerage company within the UK. It's going ex-dividend on the 3rd of December, and it will be paying out on the 6th of January. It has a very nice dividend yield of 4.11%. And if we have a look at its growth, we can see over the last year it's done pretty well actually. It is currently up 3.7% from where it was. It obviously did drop down all the way to about £20 per share, and now it's at £23.80 per share. It had a brief sell-off about May time, about 21st of May there. It briefly sold off and went all the way down to £18 per share, and we're now, obviously it has recovered and we're at 23. This is a utility company. I can imagine it being around for a very long time. And at this price, according to analysts though, it is overvalued by 75%. So it's quite a big valuation. And the PE currently sits at 49.29, which compared to the industry of 39, it is considered quite high. We look at some of its financials. It is making a nice profit. It's 8.61%. So it's making a profit, which is good to see. Obviously, that has dropped off from 2019, 2018, as to be expected. However, at least it is making a profit. And if we look at its debt to assets, they're 88%. So its debt is increasing. And it also has a very, very high debt to equity ratio of 620%, which is roughly £1 billion pounds worth of debt in equity compared to 6 billion in debt. So the debt is very high for this company. However, it is paying that nice dividend yield. The payout ratio is high, but it has been paying it and increasing that dividend for over 10 years time. So you will be getting a very nice dividend payout here for Severn Trent. Up next, the second company that we're looking at today is ticker symbol AV, and that is Aviva. So Aviva is a massive insurance company within the UK with a market cap there of £13.27 billion, which is one of our biggest insurance companies within the UK. And it is going ex-dividend on the 10th of December, paying out on the 21st of January. It's got a nice dividend yield of 1.78%. Not as high as many other insurance companies, but nevertheless a sustainable dividend yield right there. And we can see the maximum graph. It's obviously been fairly okay. It's been around about the £4 mark since early 2019. And we can see, obviously, if we look at the 1 year here, we did crash all the way down to about £2.10 per share, and now currently sits at £3.25. So it has recovered somewhat, but it is still 20% down, almost 20% down from those 52-week highs. And at this price, analysts consider this undervalued by 52%. And the PE ratio you can see is extremely low there, just 5.24 compared to the industry of 17. So you could argue you're getting this at a very good price to earnings ratio right now. And it has a future growth on those earnings of 12% in the next 1 to 3 years predicted by analysts. So you're getting a dividend paying company here with a potential nice growth in the next 1 to 3 years here. And like I say, we're 20% down from those 52-week highs. If we look at some of its financials, it's got quite a lot of debt, 96.26%. Many insurance companies do have this. This is quite high, and it also has a 52.3% debt to equity ratio. So that's not too bad in terms of its debt to equity. Debt to assets, so 96%. And it's currently got a payout ratio there of 23%, giving you that dividend yield of 1.78%. That is Aviva. Our third company on this list is Epic code BATS. That is British American Tobacco. So British American Tobacco going ex-dividend on the 17th of December and paying out on the 3rd of February. It's paying out a dividend yield of 7.76% through the year, which is very, very high. And I think it goes without saying this is a tobacco company based within the UK. And we can see here, maximum graph, it was performing very, very well all the way up to 2017. We see a big sell-off, and it's been fairly consistent over the last few years, with a 1 year graph currently down 13%. And according to analysts, this is 50% undervalued at this current price. But future growth is not too exciting. It's 7% future annual earnings growth predicted to be in the next 1 to 3 years, which, you know, okay, it's growing. However, it's not too exciting in terms of that growth. But this is a dividend paying company, and we can look at some of its profit there. It is making a profit, a 22.04% profit, which is fairly in line with where it was there in 2018. And the debt to assets at 54%. So not ridiculous amounts of debt, and it is making a profit. Those balance sheet there is not too bad at all. And its payout ratio is 74% on that dividend. So fairly high, but it is covered by its current earnings, and it has been increasing over the past 10 years. So the dividend has been increasing. It is a 7.76% yield over the course of the year, and that will be paying out very soon on the 17th of December. Our fourth company on this list is a completely different sector again, and we're looking at Epic code VOD, Vodaphone. So Vodaphone, I think we know this company is a telecommunications company within the UK, kind of similar to, you know, your O2s, your Virgin Mobile, etc. Big telecommunications company, going ex-dividend on the 17th of December, paying out on the 5th of February. And it has a dividend yield of 6.71%. So once again, quite a high dividend payer there. And is currently trading at £1.25 per share. It's been hit pretty hard again this year, down 19% from its 52-week highs. And we look at its maximum graph here, it's not been performing amazingly, okay? We was sitting very high there around 2016, 2017 mark, did sell off, and now we're at the £1.25. But like I say, we are still down on the year. And at this price, you know, analysts are also considering this undervalued by 68%. So, you know, that's what they consider it. However, like for me, this is a company that has crashed down quite a lot. So I do think you may get some recovery here, but this is a dividend paying company, which is also good to see. And with the rollout of 5G, etc., surely it's going to help boost this company's business. And we look at some of its financials. Profit, you know, it's currently making a very small loss. They're minus 2.05%. So pretty much on zero almost. I wouldn't be surprised to see that go up ever so slightly in the coming months. However, we do have a debt to assets there of 63.48%, which, you know, it's not the highest, but it has been increasing from the previous year, and it has a debt to equity of 100%. So 100% there, debt to equity, quite high on its debt front, and the payout ratio is very high. It's still paying a dividend despite the fact it is making a loss. Therefore, we have a payout ratio of 105%, which is pretty high. So for me, you know, this is paying you a dividend, and if you're holding it, you might as well make the most of it and get a dividend. But I wouldn't necessarily class that's the best dividend investment right there. And the final company on this list, the fifth and final one, is Epic code HLMA, Halma. So Halma is a big tech company, one of the very few within the UK. Is a tech solutions in the safety, health and environmental. Going ex-dividend actually on Christmas Eve, the 24th of December, and paying out on the 5th of February. It's not got the biggest dividend yield here, it's 0.72%, but it is quite an expensive company, sitting at £22.11. Considering this is a UK stock, they're not generally this expensive. £22.11. And the great thing about Halma is the growth. Look at this maximum growth here, growing year after year. And we can see it was at, back in 2012, it was at £4.48. And we've now all the way up to £22.11. So the growth has been very good. And on the 1 year graph here, we are up as well on the year, considering we'd obviously crashed down around March time. We are back now up. And it has seen a slight drop off ever so lately in the last few weeks, but we're still up very high there at £22.11 per share. But at this price, analysts are saying this is overvalued by 222%. So very big valuation. And we look at the PE ratio there, it's 42.39. So it's got quite a high PE ratio compared to the industry and the market, but it does have a future return on equity predicted to be 17.5%, which is quite nice to see, and that's in the next 1 to 3 years. The great thing about Halma, aside from getting that dividend yield as well, is the fact that the balance sheet is very, very good. It is making a nice profit, 13.78%, which has been growing, and the debt to assets isn't too bad either, sitting there at 41.29%, and a debt to equity of just 33%. So it is looking very good on the financial front and the growth front, and it's also paying a dividend. It's not the highest paying dividend stock, however I know a lot of UK investors hold this company, so I wanted to make sure it was included in this list, going ex-dividend on Christmas Eve, the 24th of December. So there we are, that's just 5 companies there from the Ftse 100 going ex-dividend in the month of December. There are a few more, but not too many. But thanks for watching, guys. Let me know down below in the comments if you hold any of these. Maybe you're planning on buying some. And remember to go and check out my US ex-dividend stocks. That is out right now on my channel as well. So feel free to check that out. It is really appreciated. And if you could smash the like button and subscribe to my channel if you haven't done so already. Thank you very much, guys. And until next time.